Hi, this is your Mortgage Rate Watch for Wednesday, November the 17th. So what's going on in the bond market today? We're actually starting off the market better, and what that's coming from is a consumer price index actually coming in lower than expectations. So what this index really shows us is where the inflation is really heading. And with inflation not really being there, it's giving the Federal Reserve some breathing room for their announcements and their plans with this QE2. Now, the heated debate over QE2 is continuing to find its own fuel to fire all the debates going on out there. In fact, just this morning, Warren Buffett came out to make the comments that he doesn't believe that short and long-term bond investments are something that are good vehicles for investments of the future. And with that said, you know, Warren Buffett has always been known to have a big following, and a lot of the investors out there attribute some of their success to what he forecasts for the future. So it's going to be interesting to see how the market receives that. Now, as far as how everything is going to come out with QE2, there's starting to be a growing caucus in both Congress and now the Senate starting to debate on whether to put a hold on it or, you know, talking to the Federal Reserve to see if they can pull it back. Now, keep in mind, the Federal Reserve acts independently of government. So really it comes down to more or less what goes behind the scenes and if there's political pressures there. But it's not something that government, as far as Congress and Senate, can come in and say, we want you to do this. The Federal Reserve is independent of them. So their actions, you know, obviously have to be warranted. There's pressures on them, and they have to justify their actions. And that's really what the market is asking for of them right now, is to justify, is QE2 warranted if we're not really in the signs of going further into deflation. There is a huge debate on this if you turn on to any type of financial channel as far as media. It goes on all day long with many top analysts, economists, you know, the chief executive officer coming out from PIMCO, which is the largest bond issuer in the entire world, coming out and saying that it could be possibly a Ponzi scheme. And again, that's very sensitive discussions that will go on when you start making those types of not accusations, but generalizations to the public like that. But that's actually how much passion is coming behind what people are feeling. It could be the potential effects of this whole QE2. So it is yet to be known. The good thing for homeowners out there, long story short, is that in the last 24 hours, we've seen the mortgage rates hit some type of floor. Today we're trying to rebound off that floor, but now, as we mentioned yesterday, now we have all these levels of resistance. And what that means is until we can make solid ground and have 3 to 5 days of the bond market trading going in an upward pattern, which means driving rates down, we're not really going to see rates really improving that much. Now, it's going to take quite a bit, because keep in mind, we fell a significant amount in the last 8 to 10 business days. So it's going to take a while to make the reversal, and of course, we're going to have a lot of headwind that hits. Make sure to follow us on the events page, because that's telling you all the economic data that's coming out that's going to be released. Next week, going into Thanksgiving, huge announcements, and then the week after is just going to be colossal. There's a couple days where it is very tough. If you had that much know-all of the market, you can almost place bets on this in Vegas. So right now, we're going to take the stance of taking some caution. But the biggest thing is, again, creating ceilings for yourself as far as how high interest rates can go, making sure you're working with a lender that has a float-down option. Again, we're going to plug ourselves here and say that we do here at the Mortgage Real and Seattle Pacific Mortgage to assist you with those. But the biggest thing is creating those ceilings so you're not exposed to any market volatility. Right now, the market seems to be paring down, and again, we're hitting some floor, but that is yet to be really, really tested, because now this is only 24 hours into it, so it's in its infancy to see if it's going to last. Otherwise, make sure to follow us on our Twitter page. We'll post any breaking news there, and we'll be back tomorrow. Talk to you soon.